Good morning. I'm Larry Steinhouse, and welcome to Money Chat Now. Money Chat Now is a politically charged stock market pre-show giving you the politics behind the biggest moves in the stock market. It's presented with comedic common sense by an expert in financial literacy, and that's me, Larry Steinhouse. All right, today is Wednesday, December 1st, and welcome to the show. We are here live on WWDB Radio in Philadelphia, and we are live on Facebook and Twitter and LinkedIn and YouTube. Just a reminder, of course, if you're watching online, hit that share button, hit that like button, and of course you can comment live during the show on YouTube and Facebook and LinkedIn and Twitter. And of course, I'll try to respond to your comments. Don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. Money Chat Now is brought to you by Investor Schooling, and you can attend a complimentary class tomorrow, actually Thursday tomorrow, by going to investorschooling.com, and there you will learn about real estate investing and stock options trading from those who do it every day. All right, on today's show, we're going to be discussing, of course, the futures and the market update. We're going to be talking about house prices slowing down. We're going to be talking about oh my goodness. We're going to be talking about Cyber Monday sales dropping, Powell speaking, and the market dropping yesterday. Stock options trading are at a high, and Biden is at it again. We're going to be talking about coffee prices. Hey, if you're a coffee drinker, you're going to want to hear this. Let's talk a little bit about the futures and the futures update. Look, it often appears that after a rout in the stock market, we are usually followed by a nice comeback. It looks like today has some promise. The Dow Futures are up after yesterday's big drop, and yesterday the pre-market, if you remember, it showed a 500-point drop, and it looked like a recovery might happen, but then it dropped, and we're going to talk about why in a little while. Of course, the moronic variant, the Omicron variant, seems to be working its way into the minds of investors. Look, when the Delta variant, was labeled as a variant of concern, the same thing happened to the market. This is good news for the market. It basically means that bargains are here and you should start buying. By the way, here we go. Let's talk a little bit about what's going on. The futures look like the Dow is up 341 points. That's fantastic. The S&P is up 61, and of course the Nasdaq, wow, is up 244. This is fantastic. So it's going to be a really, really good day. All right, let's talk a little bit about house prices. All right, so house prices are slowing down. House prices are actually, they say they're slowing down, but I got to be honest with you, I don't think they really are. Look, home prices rose 15.9% in September year over year, down from, guess what? Down from 19.8% annual gain in August, according to the S&P CoreLogic Case-Shiller National Home Price Index. Whatever. Basically they're claiming that this is the first decrease since May of 2020. First of all, they're saying that house prices are up 20%. Holy cow, that's amazing. Wait, I said 20%? No, it's actually 19.5%. Seriously? And in August it was 19.8%? I don't really think this is a decrease at all. It's just not an increase as fast as it's been going. Look, trees don't grow to the sky, and eventually house prices have to settle down. Here's something interesting. Cities with the highest price increases were Phoenix, Tampa, and Miami. Phoenix prices were up 31.1% year over year. Tampa was up 27.7%, and Miami was up 25.2%. 6 of the 20 cities reported higher price increases in the year ending September 21 versus the year ending August 2021. By the way, it looks like all the people that are sick of unconstitutional mandates and dictator governors are moving to the freedom and unconstitutional states. That's why you won't find these kind of increases in those dictator states. Take a look at Chicago or Minneapolis, for example, right? Who saw the smallest annual increase gains. By the way, they were still over 10%, but look, everywhere else, if you look at the places that are freedom-loving states, they're going up 20-something%, where these guys are going up 10%. Anyway, last week I reported that rents were all increasing as well. Of course, mortgage rates are also playing into prices. The average rate on the 30-year fix fell to a recent 2.78% at the start of August, according to Mortgage News Daily, and then began to rise steadily. It rose steadily. These numbers are unbelievable. It ended September at 3.15%. It's still not a big deal, but I'm going to tell you, I'm going to expect interest rates to rise in the new year, so definitely get prepared for that. Here's something interesting, too. Here's an interesting fact. The most expensive city in the world to live in is currently Tel Aviv. And this was reported by the Economics Intelligence Unit. The EIU said that Tel Aviv rose up in the rankings mainly because the Israeli currency, the shekel, had soared. Many in Israel are saying this is because of the high level of vaccine percentages of citizens. Here we go again, right? Anyway, second on the list for the most expensive places to live is Paris. New York came in 6th and Los Angeles came in 9th. By the way, my guess is the taxes in New York and Los Angeles are so high that the actual cost to live in these places are actually a lot lower. But because of these tax-to-death bureaucrats, the tax costs are just overwhelming and raising the prices. Ugh, taxes, taxes, taxes. All right, let's talk a little bit about Cyber Monday. You know, did you shop online this year? Most of us have been shopping for many years online, and a few years ago, of course, online sales overtook retail sales. This year, online stores did well, but not as well as they did last year on Cyber Monday. According to data from Adobe Analytics, consumers spent, you ready? $10.7 billion, which is a 1.4% decrease from year-ago levels. Now look, this could also be the reason why the stock market paused a little bit yesterday. So remember that, you know, we had some bad news yesterday on this. We also had the moronic virus. So that's all that stuff is going on as well. But anyway, the slight deceleration on online spending follows a similar pattern that played out on Thanksgiving Day and Black Friday this year. If you remember, they also didn't spend as much money. They appear to have spread out their dollars into more days rather than squeezing their shopping into 1 week or Cyber Week. Of course, everyone was afraid of the scamdemic as well as the cargo carrier backup in the Pacific. Look, I'm beginning to think this was a great marketing play by retailers to help spread the income over a few months instead of in one day, and possibly get consumers to spend more. All right. I'll try to skip the conspiracy theory of the retailers at this moment. Let's talk about the online stocks to play for this, though. However, Amazon actually went up yesterday. Best Buy, who has both online and brick and mortar presence, also hardly moved yesterday. So these are really good plays. I've been saying this for a while. Retail stocks are the place to go. Go into retail stocks. Next year they're going to do very well. Look, here's the other thing that's going on. You're definitely going to see that the cargo ships are going to start unloading again, and there's going to be pent-up demand. I'm going to talk about that a little bit later. Let's talk about Powell speaking yesterday, and then the market dropped. Ugh. Yesterday, it actually looked like the market might rebound, and then Powell made an announcement that he felt that the tapering, the less bonds, would go as planned. Now, look, I agree. Anyway, these were his comments. At this point, the economy is very strong and inflationary pressures are higher, and therefore appropriate, in my view, to consider wrapping up the taper of our asset purchases, perhaps in a few months or sooner. So basically, he's saying he's actually going to slow down bond buying sooner, which is going to raise interest rates, which is what they should have done 6 years ago. Ugh. Anyway, I expect we will discuss that at their upcoming meeting, Powell said, and he suggested that the Fed's focus has now changed to fighting inflation and its negative impacts rather than any more potential disruptions in economic activity from new variants of COVID. Because every single day there's going to be another new variant of COVID. Keep that in mind. So it's time to start ignoring that and getting back to life. After this statement, the market crashed down about 500 points, and it was a bad day yesterday. But like I said, I personally agree with him. I think we should absolutely be raising interest rates. The problem is it might be a little too late. The runaway inflation was caused by the stall in tapering in the first place. Yes, I understand the scamdemic was an issue. However, the tapering should have started way before this COVID nonsense. I told you before, I'm a big fan of inflation, at least now, as a property owner, because my property values are going up and up and up, and rents are going up and up and up, and hey, I'm a capitalist, so I'm going to take advantage of anything I possibly can. But however, for the sake of the economy, interest rates must rise. I was surprised that the 10-year bond didn't increase yesterday with this news. In fact, the entire market was down yesterday, and that was kind of weird too. Even gold would rise from a statement like this, and it didn't. It's clear that the money managers are pulling their money on the shelf and putting on the shelf for safekeeping. Hopefully, Powell won't speak again today, and the market will do all right. I mean, this is pretty wild. All right, I just want to say online, so I want to say hello to Joe and Robert and Zerar. Thanks for watching. And hey, if you guys have any questions, I don't know if I could actually answer. I know Zerar wants to ask me about a stock. I can't do that right now. But hey, I want to thank you for listening. But if you guys want to make some comments, feel free to do that. I also want to talk about the fact that stock option trading is at a high. So stock option trading has gained so much popularity that record amounts of trades are being made. Total option volume is averaging 45.1 million contracts in November, which is on track to break January's record high of 44.3 million, according to a director of trading at Schwab. Apparently, the action on Friday, remember Friday we dropped 900 points, it made this record-breaking estimate possible. And I don't have the exact numbers now, but we'll probably have them coming in soon to see how many options actually traded. But just so you know, when I personally learned about stock options trading, most people I spoke to never even heard of it. And now it's like so popular. And when I created my rules for stock options trading, I thought I was a genius, and for the most of the years I was. But now it appears that everyone thinks they know something. Usually very little, but something about stock option trading. The volatility is making the game more interesting, and newbies are piling in on the few wins that the beginners make. And of course it sucks them in, and then they end up losing money because they don't know exactly what they're doing. Of course, now we have Robinhood apps and transactional trading apps and mini courses everywhere in this topic. And of course, I've been teaching it for years during all this popularity, and I've seen the ups and downs. And if you're trading stock options, let me know what you're holding. So if you're trading stock options, put it in the comments on Facebook or LinkedIn and Twitter. Let me know what you're holding. I'll be curious. All right, what options are you holding? Of course, if you'd like to learn more about how to trade stock options, give me a call at 866-424-2829, and you can attend a complimentary class tomorrow night. And let's find out more about this in our commercial. Don't forget to put what stock options you guys are playing, and we'll talk to you in about a minute.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
All right, welcome back to Money Chat Now. I am your host, Larry Steinhouse. And of course, if you'd like more information on Investor Schooling, you can go to investorschooling.com or you can call 866-424-2829. And hey, I wanted to thank everybody out there on WWDB for listening to WDB Radio in Philadelphia. And if you're watching online, please hit the share button so you can help your friends learn about how to make more money. Hit that share button, hit that like button, and let me know you enjoy the show. And you can also leave comments on Facebook and Twitter and LinkedIn and YouTube. And of course, I'll try to respond to them. Hey, Bill's saying that he's got some CCL calls, and that's pretty cool. And he's got some, actually, I'm looking at what he's got. He's got a call out to April at a $7.05 strike price, which is just phenomenal. And if you guys listening on the radio don't know what that is, you need to definitely reach out to Investor Schooling. Go to investorschooling.com and find out more, because that is an awesome play, Bill. Excellent. All right. So far we've been discussing the futures, and right now the futures are on track to be up 325. The S&P is up about 58, and the NASDAQ is up 238. That's fantastic. We've been talking about the fact that they're saying house prices are slowing, but I don't necessarily agree. We also talked about the fact that Cyber Monday sales dropped. We said that Powell spoke yesterday, and that made the market drop. And of course, we were talking about stock options trading and how high it is and how great it's doing. All right, here we go. We're going to be talking about Biden is at it again. I'm going to be talking about coffee prices. So let's roll into it. But first, hey, you ready to go? Let's talk a little bit about what's going on with Biden. Biden is at it again. Gestapo Joe Biden, yeah, once again with the news of all the moronic variant. And for those new listeners, especially on WWDB, moronic is an anagram for Omicron, and moronic is a more appropriate name for this variant. Anyway, with the news of the moronic variant, the Supreme Leader Joe Biden is suggesting all visitors to this country get tested before entry. All right, that might not be so bad, but check this out. Then he wants them tested 3 days after they enter, and then he wants them to be quarantined for 7 days. Yes, here comes the concentration camps modeled after, wait, guess what country? No, not the one you're thinking, after Canada and their dictator president. That's right, check it out. If you really want to see a country that has fallen to Nazi-type leadership, look up some of the articles on Canada. They actually arrested church pastors for holding church services. Anyway, back to the story and what it means. With the Supreme Leader's possible new restrictions, many will not go overseas for vacations or businesses. And basically, they're going to stay there, and they're not going to go to other countries, and that's what's going to happen now, is it's going to, of course, affect travel stocks. At the same time, also, many visitors or returning citizens will also be limited in travel. This will once again dampen the travel industry, and why we saw the airline and cruise stocks plummet yesterday and over the past few days, although I got to tell you, at the same time, we're hearing the news reports about this variant being similar to a bad cold. Yes, look it up. The actual South African doctor who discovered it is saying the symptoms are mild and no one should panic. Of course, the sheep all panicked anyway, and now we have the moronic variant to deal with. Look, I'm going to tell you right now, because of this, load up on travel stocks. With each variant, the news cycle gets shorter and shorter. Want to get a clue for the next variant, when the next variant is going to be discovered? Check this out. You want to get a clue for when the next variant is going to be discovered? Watch for Moderna's stock to drop. When it goes into the low 200s, that's the time the newest variant will be announced. If you watched last week, you also saw that Moderna dropped into the low 200s, and then all of a sudden, there was a new variant, and Moderna was back in the high 3s. So I'm telling you, watch for it. It's pretty wild. This is unbelievable what's actually really going on. Hey, I talked about this IPO yesterday. I don't know if you guys were paying attention yesterday, but HashiCorp, you guys want to pay attention to that? That's a new IPO coming out next week, and they're going to be talking about, they're going to be connecting to Amazon Web, and they're also going to be connecting to, of course, Microsoft Azure. This is definitely something you want to watch and take a look at. It's opening between 68 and 72 cents. I'm sorry, $72 a share, and something you want to do. All right, let's talk about coffee prices. Hey, are you a coffee addict like me? I can't get my day started without a cup of coffee. I even enjoy a brisk morning cup of coffee out on the porch, and I gotta tell you, but thanks to inflation, the cost of coffee is skyrocketing. I know, I went to Dunkin' Donuts today, and my coffee was $2.65 for a large coffee. So let's talk about why it's getting so expensive. First of all, almost all the coffee beans are grown in either Brazil or Ethiopia. And that's the part of the problem. So Ole Hansen from Saxo Bank said that over the past 12 months, a perfect storm of events has been conspiring to give our beloved bean a boost. Hey, if you drink coffee, let me know. Put it up in the comments. Let me know if you're a big coffee drinker. The question for future price action is how much of these developments are potentially longer lasting. I think we need to focus on what's being unfolding in Brazil this year, where we've had a generally low in temperatures and a quick spell of frost would hit some of the growing areas, and that we've had a period of drought, and this left the 2020 crop in a bit of precarious state. So these are all the things he's saying. Add this to the supply chain issues, and voila, you have a coffee shortage. Now, if we only have had coffee growers in the United States, we wouldn't have these problems. So if we grew coffee in the United States, we wouldn't have these problems. It kind of reminds me of the oil problem and the reason gas prices are so high. Time for me to get a cup of coffee while you listen to the following information from our sponsor. I'm going to see you back here in about a minute, and then I'll discuss my favorite stock picks for today. Coffee.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Felton Cohn and Larry Steinhouse about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend investor schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. Investorschooling.com.
All right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse. And so far, we've been discussing the futures and the market update. Let's take a look at these futures again. The Dow Futures is still up 320. It's going to be a good day. The S&P is up almost 60, and the NASDAQ is up 235. I'm pretty excited about that. That means we're going to probably have a really good day. It'll be nice. And, of course, we also have been discussing house prices are slowing, and I disagreed with that. I think house prices are not slowing. I think they're just, whatever, they're fine. They're up 20%. It's fine. We talked about the fact that Cyber Monday sales were not as good as normal, but I also think that was a little bit of a ploy by the retailers to make it, make people spread their money around a little bit more evenly throughout the months. We also talked about stock options trading being at a high, and we had a couple of people online let us know about some of the plays they're playing. Oh, Mick's got a beautiful play. He's got AAL, American Airlines, out until May. What a beautiful play that's going to be. That's going to pay off really well. And if you want to know anything more about stock options trading, of course, you should let us know at Investor Schooling, and you could give us a call at 866-424-2829 and find out more about that as well. All right, we also talked about Biden is at us again. Gestapo Joe wants to now quarantine people. Oh, unbelievable. We talked about the fact that coffee prices are really high once again, and let's talk about some things that's going on in the market today. But first of all, did you hit the share button? So if you're watching online, did you hit the share button? Let everybody know what great stock plays are coming up. I'm about to tell all the stock plays, so if you're online, let people know that you're online and that you're watching the show, and then all the great stock plays are going to be up. Let's go, Bill. I see you out there. Share this. I see you, Mick, out there. Thanks, Eric, for watching. All right, hit that like button also. Let me know you enjoy the show. You can leave comments on Facebook, on Twitter, on YouTube, or LinkedIn. And, of course, if you're listening on WWDB Radio, set one of your presets to this channel and listen every day at 7:30 for all you need to know about how to rule the stock market. So if you want to make money in the stock market, set your station right now for WWDB and listen every day at 7:30. Let's talk about some things that are going to go on today in the market. I'm pretty excited about it. It's going to be a nice one. Look, yesterday, of course, was bad, right? And as I mentioned, Jerome Powell spoke about bond buying tapering, which is what set the market into a tizzy. So basically, when he said, hey, look, we're going to continue slowing down buying bonds. Actually, I don't even know if they're going to buy any more at all, but they're going to be slowing down buying bonds. That's going to cause interest rates to rise, and that's going to cause the stock market to, change. So typically, watch it when the T-bond goes up or when the 10-year Treasury bond goes up, you'll see tech stocks go down and the opposite. And actually, if you remember yesterday, I mentioned that. I had said I was surprised. I was watching the T-bond go down, but then I was watching the tech stocks go down too, and that was unusual. But that's not really the actually what happened, because let's see what happened for real. So what happened yesterday with Apple stock was something different. Everything tanked except for Apple, and this is why. And of course, as I said, the T-bond, when the T-bond goes up, Apple goes down. When the T-bond goes down, Apple goes up, or tech stocks go down. Whatever, you got the idea. Anyway, Apple has been a safe haven for investors for quite a while. And it's a company that can't miss, so investors pile in when the market is sinking. Look, I stated a few days ago that I expect Apple to hit 180 before the spring and probably 200 quickly after that. So if you're into Apple, it's a good play. If you're not into Apple, I recommend it. It's a really good play, especially if you're not a stock option trader, but a stock buyer or buy and hold. Apple's going to be a great play for you. So I would definitely get into Apple, a good play. So Meta, the owner of Facebook, yesterday it dropped about 11 points. And I'm going to tell you, that hit right around my buy level, which was 325. Unfortunately, I was out of money. I was loaded on everything else, and I had no money to buy the Facebook stock. My option portfolio is like some of the people up here that we've been talking about. is in AAL, CCL, and BA. You know, Boeing is BA. And I'm all in. So the problem is I'm all in on these stocks. I'm looking to see AAL and I'm looking to see CCL really take off. Now you got to understand too, right? Here we go. So I wouldn't normally recommend to be all in on one sector, but the history of the past year is telling me this is going to be a great play. The only question is, did I get in too early? Now I got to tell you, I got in when the stock, like for example, I got in when CCL was around 19, so I'm not that concerned with it because it jumps up pretty quickly normally, and the same thing with CCL. I probably got in about 20, and I'm looking to see AAL in the 22 to 23 range and CCL in the 27 to 28 range. So we definitely have a lot of movement here. And if you're a stock options trader, those are going to be great moves. If you're just a stock player, I'm going to recommend travel stocks. I'm going to recommend CCL. I'm going to recommend RCL, and I'm going to recommend, of course, as we talked before, Apple, Boeing. These are all great plays as we go into the new year. There is no doubt these stocks are going to do really, really well. So get in on them. If you're not already in on them, get in on them. Here's another one that was interesting. Gap stores were kind of beat down yesterday. So the Gap, you know, where you get your jeans or your other clothing or whatever the heck it is. I don't know. I haven't shopped in a Gap store since I was 20. I don't even think they were called Gap stores then. But anyway, the Gap stores were beat down yesterday, and the price of the stock hasn't been this low since the year 2000. 2000. So the stock's as low as it's been in the year 2000. I said this yesterday. I think retail is a great play, and it's going to be a great play into the new year as the supply chain issues diminish and pent-up demand will drive these stocks like Gap up. All right, let's talk quickly about the crypto scene as well. Hey, if you were in Ethereum, you were pretty happy because the Ether token is now around 4,700, which is just shy of its record. 5,000 is coming, and then it will move higher. Look for a pullback in the low 4,000s and jump in. That's going to be a great play. All right, of course, Bitcoin is stalling at 57,000. Shiba moved up a bit, and it's over 50 millionth of a cent for a brief time. Gold and silver are also stalling, and gold is just under 1,800, and silver is just under 23. Also great plays. And of course, I said yesterday that the T-bond moved down. It's moving up just a little bit, so if you want to get into that as well, that would be a good play. And I'm going to tell you right now, I want to thank you all for watching Money Chat Now. If you've been watching on YouTube and LinkedIn and Twitter, I want to thank you for listening on WWDB as well. And of course, I love your continued support. Thank you so much. Don't forget to like the Money Chat Now page on Facebook. Don't forget to subscribe to the YouTube channel. And from time to time, you should know that I own some of the assets and options discussed in this show. The opinions discussed in this show is solely mine, and no one has asked me to discuss them. Thanks again. My name is Larry Steinhouse, and I look forward to giving you lots of tips tomorrow at 7:30 on the next episode of Money Chat Now. So have a profitable day.